I might be a degen. I put in an order for a new crypto today based on looking at the chart, and that crypto is Dogecoin. We're going to talk about that here today. We're also going to talk about some other plays, some other tickers that I don't normally cover every single day today. Also, before we get going, smash that like button. It helps the channel more than you can imagine. Don't forget to subscribe if you've been with us a while and haven't done so yet. We've got a brand new hoodie on the Trade Cave store. We've got the Rocket Doge now available as a hoodie on the Trade Cave store, so go ahead and check that out, and don't sleep on the sticker shop. We've got some stickers available here, including the Rocket Doge and the Astro-Bull. Both of those links are in the description as well as the channel bio. All right, let's take a look at Dogecoin. So why did I get into Dogecoin right now? There is a reason I got into Dogecoin right now, and that reason is, well, one, we're coming off of the green fib cloud down here. That doesn't happen every day. I tell you what, that does not happen every day. So that is a big, usually an area to accumulate. So I'm going to start accumulating some Dogecoin, and I'm looking for it to return up to about 22 cents, maybe even higher in the cycle, later in the cycle. We'll see. But we got it into the green cloud there, right? That's one thing, and that's great. We also come over here and we look at, if I could get it, there it is. All right. And we are making a double bottom. So we made a double bottom right here. We got a bottom, and we're above that neckline for that double bottom right now on Dogecoin. That's great. I like that as well. The other thing I'm looking at here is the fact that the momentum oscillators are pointing up. Now the slow one is still kind of pointing down, but it is flattening out. So it might flatten out around 50 and curl back over. You can see here the average force, the negative force, which is like that pinkish color, is getting weaker. So the up move is gaining some strength as that lower move, that down move pressure is alleviating. So that's great. That's also good. One more thing I'm going to point out here, and I've got to close this here because, okay, I just opened up another one. All right, hold on. Here we go. So we're going to bring out a fib for this one, okay? We're going to go from the bottom of the move from January 2024, okay? And we go from the bottom of that move and we go up to the top of the move in 2024. So we're looking at a move from 7 cents to 22 cents. And you can see here that we came into the smart money zone, which is the 786. We came into the 786, we bounced. We came back into the 786, we dipped, we came back up to it. And as soon as we got above it, we bounced pretty hard. Guess where we are right now? We bounced off the 786 area one more time. We're going to hold above this area. So the way I'm seeing this is my ultimate downside is likely 8.9 cents. Okay, 8.9 cents. That's where I would be cutting my losses and saying I was wrong. Dogecoin is going to stay down here a lot longer than I thought. Okay, I haven't actually got my order in yet. I haven't bought the coins yet. I've just got the order in. I put in an order for 10.9 cents. Okay, it's currently at 11.1 cents. So if it comes to 10.9 cents, I'll be the proud owner of several thousand Dogecoin. Okay, great. I am looking for a move from 10.9 cents, which is down here. All right, 10.99, close enough. 10.9 cents. I'm looking for a move at least up to 22 cents. That would be a 106% gain. That'd be pretty fantastic. Now, if things go super well, I'd be looking for a move up to about 32 cents, which would be a 196% gain. And why that amount, you say? Because that amount comes right into the zone over here where I would expect some sort of reversal around December on the way down from the last bull cycle, which is around between 35 and 26 cents. So I'd be looking for price to come into that area. If it gets above 22, and then from there I'd probably expect it to fail around December, January time for Dogecoin. Okay, so that's why I'm looking at Dogecoin right now. That's why I've got my order in. My order has not executed yet. It's going to execute at 10.9 cents whenever that may happen. I would be looking at 8.9 as my stop loss. If things go badly, 8.9 cents is where I'm jumping off and waiting for Dogecoin to look good again. I just saw one more thing in Dogecoin chart that I like right here. We came down, right? We made a shoulder. Let me get my drawing out. We came down, we made a shoulder, we're made a head. We're on another shoulder right here, just like many of the miners. And where does that end? Ends up here about 21, 22 cents if we do an inverted head and shoulders on the Dogecoin. So that's why I'm looking at Dogecoin. Okay, I think it's in an area where I like. It's an area where the risk is low and the reward is potentially high. And an area where if it drops a little bit and I lose a little bit on that, my stop loss isn't going to like wipe out my account or anything. So that's not bad. Okay, the other things I wanted to look at was one, Disney. Disney, we're back in Disney. So I went long again on Disney right before Hurricane Milton. Womp womp. Hurricane Milton got me, right? That's where I had these 2 days here where it came down big, and then Milton wasn't such a big deal in terms of I mean, it was a big deal for anybody affected by it, but it wasn't as destructive as expected. So as far as the market was concerned, it wasn't necessarily a big deal. Didn't mean to sound callous or anything there. Okay, so it came down and it bounced right off my stop loss right here. You can see I had a stop loss here. It opened up beneath it one day and then kept driving up higher. So I did not close it out because I don't close out on wicks. I close out on closes. So it's got to close down there. It opened down there and came up, so I wasn't really too concerned. And it is continuing to carry on upward right now. Right, and today we are bouncing off the 5-day moving average. The momentum oscillators are kind of middling around between like the 60s and 70s, but the blue one is pointing up, which will drag the yellow one up, which should drag price up. And I would not be surprised, okay, to revisit the orange line up here at 96.95. Now I put this yellow one here. This is where I was expecting some sort of caution, right? Some sort of resistance, and that's why I put that there, and that's exactly where we got it. So I'm expecting a little bit, maybe tomorrow, next day, a little bit of moving around until the S&P decides to take a nice launch, and then we could be looking at 96 again pretty quickly. And I'm thinking, since I bought these out till December, I am still looking at maybe 98, 99, potentially tapping that $100 before the end of the year for Disney. So I'm still holding on to that. I'm almost break even now, actually. I'm like down $20 on it. I was down about 100, so not so bad on that one call there. One other one I wanted to talk about was SQ. Remember when we were talking about that? Well, did exactly what we were mentioning it was going to do. As soon as it got above the white line, came back to test the red line one more time. It loves to test the stop loss, but now look at where it is, going right back for 73.66. And I tell you what, above 73.66, I'm still very interested in this move because above 73.66, it confirms an up move outside of this very aggressive sell-off that started happening on July 18th. So as soon as we're above 73.66, this aggressive sell-off is forever. Okay, I shouldn't say that. Is for this move behind us. And then we are opened up all the way up to like 80s. Okay, I should have been on this train already. Probably we're doing higher highs, higher lows. All right, so I'm looking for the next low to come in around this white line again. Maybe 67, maybe 66. I'm looking for something like that. Okay. As soon as I get that, I might go long on SQ on block all the way up to 73.66, where I expect it to get into some turbulence. And then from there, I'd be looking for it to go up to like the $81 to $84 range on that. So SQ is actually kind of doing exactly what I wanted it to do, right? It came up into my little box up here in the past, right? Then it failed for quite a while, quite a while. I wanted it to get over 73.66. It failed. It came down aggressive. And then I drew this white line here saying, hey, when it gets over this, it's going to go up. And look, got over it, and it's going up. Beautiful. It's going to hit the 73 probably tomorrow or the next day, and then it might curl over. It might cut right through it. If it cuts right through it, I'm looking for the 80s. If it curls over, I'm looking for it to come back to my white line here around $67. And then from there, I'd be looking for it to go up even higher. Here's the other one that I've talked about several times, Vertiv Holdings. Look at this thing. I was talking about this thing back here when it was at about $70, right? I was talking about this thing at around $70. Look where it is now. It went as high as 113 since then, okay? Fantastic. If you were in on this thing when we first started talking about it, wow, did it ever launch. But now we're looking at something a lot more bearish here. So if you're in this thing, this one's probably important. I don't know if anyone is, but this is important. Now, this formation right here, and I'm sure some of you can tell me what that is, that 3-candle formation right there, that is bad. That is a bad, bad formation, okay? We're looking at an evening star formation there. That is very, very, very bearish, especially since we closed out beneath the body of the big green candle there on this engulfing candle here. That is bad, especially the little gravestone doji there in there. That is bad, 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 bad news bears. So this thing, I will very boldly say, this is going to come back to the 21-day moving average, which is at 101.21. Do I think it will stop there? Maybe. But ultimately, if we get the selling pressure, like if we are to get the selling pressure, that 21 will break and will come down to find support from back here in June, which would find us at around $94, $95. Okay, by that time, the bottom ATR band might come up and catch us there. But that is what I'm looking at. Maybe if we're really unlucky, coming all the way down to the 200-day moving average, or if we're not in it yet, very lucky. On my income machine paper trades, I did make about $500 on this move up, so that was nice. Kind of wish it was real money, but I don't have enough real money to do all the plays I want to do, all the ones that I see. I don't have enough money for all of them, so some of them got to be paper. This was one of the ones that was paper where I made $500 in a couple weeks, and we'll talk about that in a future income machine video. Lot in one breath there. But I am expecting this thing to come back down at least to about 97, probably to like 95. But first, let's hit 100. First 100 might stop us. So we're going to take a look at that, watching that closely for Vertiv. Remember, this one is closely related to NVIDIA and the new Blackwell chips because they require immersion cooling. Vertiv is one of the very few publicly traded companies that provide immersion cooling for data centers, and that's why I brought this to the community here because of that, and it has been on a rising star as a result. Right now, it's a bit overheated. It's a bit too hot. It went up from mid 70s up to low 100s, and I do think it's going to come back down probably to the 90s, somewhere in the 90s, and then go back up from there. So we're going to watch out for this thing now on the way down. We're looking for it to come down and catch us on the way up. All right, let's take a look at Tesla. We don't look at Tesla too often, but today Tesla is quite interesting. So I actually like Tesla where it is. Okay, I really like Tesla where it is. I do think that we might go up a little bit here. And if earnings isn't stellar, we're coming back to the 200-day moving average. The 200-day moving average is down at 202 or 201.96, so $202. I do think that we're going to get to $202. We might even tap 200 before going on our way back up. I don't like these three doji candles. These are very, very indecisive down here. So the fact that we did not bounce and bounce hard down here is a bit telling. That means that Tesla isn't ready to go back up yet. Now, unless this earnings here on October, whatever October day that is, on October 23rd, if those earnings are good, if they come out and they said, man, we sold so many Cybertrucks, we never thought we'd sell that many Cybertrucks, we're going to be producing this new car for less than $30,000 in Model 2, you're all going to get your hands on the Model 2 and a robo-taxi in like a year, then yeah, this thing's going to launch if they come out and say some stuff like that. But the last couple of earnings reports for Tesla have been kind of bad. Okay, they've been kind of bad. Let's not lie to ourselves. It's been kind of bad. Right now, I would not be surprised if we came back up to the 5-day moving average at about 226. Maybe 230. We might kiss the bottom of 230. Maybe 299, 298 or something. Or sorry, 229.99, 229.98. Sorry, a little, not 299. Say that's crazy talk. And then from there, curl over and come back down to the 200-day moving average. I don't think we're done with the 200-day moving average yet on Tesla right now. And that is solely because the robo-taxi event was underwhelming, much like we know the majority of Tesla events are fairly underwhelming. I'm not saying that the company itself is underwhelming or that they're incapable of delivering or anything. They have a pretty good track record of delivering, but their announcement events and honestly, the earnings events that don't have a new vehicle announced tend to be lackluster. So that's why I was expecting a bit of a sell-off from Tesla on that. Now, I wasn't going to bet on that because I don't like betting on stocks that can wipe out my whole account, but I did not think it was going to go up, so I stayed out of it, and I'm glad I stayed out of it, and I am looking for it to potentially come to the 200-day moving average at about 202. Might catch it at 205, but I don't think we're done with it yet before we make our way up. As soon as Elon gives us a definitive robo-taxis will be here this day, once he gives us that, we are going to see something special out of Tesla. I think we might see it return to the 300s, to the 400s. That is going to be very, very exciting. And talking about Elon, that's another reason I'm in Doge, because Doge is way, way down right now, right? But also, Elon has an affinity for Doge. There has been lots of speculation that at some point in time in the future, he will integrate Doge into X as a payment method on X. Now, I'm not saying that's going to happen. It's totally rumor, totally speculation. But if it does happen, you better believe Doge is going to be touching $1, $2, maybe $3, and I will be very happy to have at least a small bag of Doge in the case that is to happen. I'm not saying it's going to happen, but it could, and that's one of the reasons I am looking at Doge versus some of the other meme coins like SHIB or Pepe or any of the others. That's why I look at Doge right now. Okay, that's it. So, anyways, that's all I've got for you this afternoon. Please like, comment, subscribe, share this video. Check out the Trade Cave store link in the description as well as the channel bio. You know you love that new hoodie, the Rocket Doge. We are taking off like rockets. Might as well show that off with the hoodie. And don't sleep on the sticker shop, where the stickers are actually affordable now. On that link is also in the description, and have a profitable day.